Hello everybody, welcome back for another video. Hope you're all doing well and that you were all having a great day. To start things off, Lou Kerner, a partner at venture capital firm Crypto Oracle, compared the current slump in crypto prices to the dot-com burst in the early 2000s in an interview with CNBC on the 21st of November. On CNBC's Worldwide Exchange show, Kern stated that the strong coins should be viewed like big companies that came out of the dot-com bubble, using the example of the e-commerce giant known as Amazon. He said, if you go back to the internet bubble, which is what a lot of us in crypto look at for direction, Amazon, arguably one of the greatest companies in the history of mankind, was down over 95% over 2 years. Amazon went public in May of 1997 with its share price of $18 each. By December 1998, the company's share price surged to more than $300 per share, but right after the dot-com bubble burst in March 2000, the share price slumped to just under $6 a share. Over time, Amazon managed to become the second U.S. company to reach a market value of $1 trillion with a T, and I believe the first one was Apple, if I'm not mistaken. Kerner said that current volatility is nothing compared to what longtime BTC investors have encountered, recalling a day in 2013 when the market fell by 70% overnight. This is what investing in crypto is all about, he said. Also noting that the impact of all great technologies changes is overestimated in the short term and underestimated in short term, underestimated in the long term. Remember I said before, and I'll repeat it once again because I think a lot of people need to hear this. I understand for a lot of people who are new to cryptocurrencies that the market may seem completely insane. But when people ask in the comment section why I am not so cheery, but why I don't seem so down when the prices are going down, because I've seen many times before, like we've had times in the past where you go to bed and the market is up by 25%. You wake up, it's down by 50 because everything's completely in red. By that afternoon, it's up by around 60. And by the time you go to bed, it's down by around 22%. So there's always constant fluctuations. The market has actually never been this stable as it is right now. I know that seems a bit weird, but it definitely is. The long and short of it comes down to one of the main things that I think people feared in crypto for a very long time was the eventual crash of the cryptocurrency market. And what I mean by that is that even at the beginning of the year when crypto prices were going, I think Bitcoin had fallen from 20,000 and it was around, let's say 14, 13, 12,000, somewhere around that time frame. And everyone kept on calling that the market was going to go back up. Prices were definitely going to shoot back up. There was no way on this earth that Bitcoin would ever fall below 10K. Bitcoin fell below 10K. And even as the people like Jamie Dimon and that other rich guy, I can't remember his name, started coming on TV and they were talking about that the crypto bubble had popped, everyone was like, there's no possible way, because everyone was trying to find a correlation between the 2000 bubble popping in the dot-com burst and in the cryptocurrency sphere. And people said, no way it's going to happen. One of our biggest fears for quite a long time was that we would have the bubble pop or have something in the cryptocurrency space completely collapse. And we're going through it right now, and it's not as bad as it could be or what we thought it was going to be. A lot of people thought that if we had a cryptocurrency price pop bubble burst too early in the game, if you will, quote unquote, that crypto would be a failure, i.e. Bitcoin is only 9 years old. The rest of the cryptocurrency market is maybe 4.5, 5.5 years old, and experiencing a huge pop would be detrimental to the entire space because it would show how young the technology is and nobody would want to use it. And people thought that a lot of the coins, when we did have a pop, would completely go to zero. What we have right now, I mean, it's not the greatest situation, but we do have a lot of coins that have dropped by around 94 to like 98%. I think like Cardano was like $1.20, and I think it's currently sitting at around like 4 cents or something like that. So the bubble has popped. The market is down. But this is also calling for a greater price movement in the future. I still believe when you look at the comparisons to first of all, what we had for the dot-com bubble, how do I say this? What came out of the dot-com bubble are some of the richest companies that we have in the entire world right now. There are a lot of correlations being built between some of the top coins. I'm not going to name any coins in particular to try to sway opinion, but there are at least like 7 of them that a lot of people are heavily betting on will become the next Google, become the next Amazon, become the next Apple, become the next Microsoft, and not exact copies of them, obviously, but will have as great a history as these mega companies. So the pop was going to happen at some point. It was completely inevitable. Whether we got up to 25,000 and we had to burst back down, or whatever the case might be, the time that the market has had when prices are a lot lower where they are right now has been, even if we don't want to admit it, it was completely necessary. We needed the prices to drop down this low. It's also a very good time, like I've said before in many other videos, if you are a long-term holder, it has been a great time to accumulate. I have been doing it almost nonstop since the entire way down. I kind of wish that I had started around like a week ago as opposed to like in May. No one knew exactly how far the prices were going to go down. But I'm glad that we've had this pop. I'm glad that we have more or less gotten it out of the way. And I'm extremely excited to see exactly what cryptocurrencies are going to bring from here. Alrighty, let's move on. I'm going to breeze over this one slightly. On the 20th of November, Coinbase announced that on its platforms, the Bitcoin Cash ABC chain, that is the original one, would retain the Bitcoin Cash title and ticker symbol as BCH. Moreover, limited trading is expected to resume on Coinbase Pro and Coinbase Prime. This was, I believe, yesterday. On Coinbase.com and the company's iOS and Android apps, trading is expected to resume within the next week. For the moment, Coinbase will only offer limited trading support for Bitcoin Cash and will not allow sending or receiving. For example, customers may trade their Bitcoin Cash for Bitcoin, but they will not be able to send their Bitcoin Cash to their MetaMask wallet. According to the announcement, trading of Bitcoin Cash Satoshi's Vision is not expected to resume anytime soon or maybe at all. They said our current intention is to support withdrawal for both the Bitcoin Cash Satoshi Vision chain so that our customers may withdraw funds at a future date. We anticipate this development would take at least a few weeks, but may take longer, end quote. Responses to the announcement have been mixed, as to be expected. The Bitcoin Cash hard fork hasn't been fully of equanimity and goodwill, and despite the prominence of Coinbase, it has its own solid set of detractors. So Coinbase has a problem, as does the rest of the cryptocurrency, not even the cryptocurrency space, I guess kind of maybe-ish a little bit, but the other crypto exchanges have a major issue. When Coinbase first had the issue with Bitcoin Cash, and Bitcoin Cash came to life, they announced that they weren't going to not promote it. They weren't going to offer it. They said, we have Bitcoin. It's more than enough. And then within 2 days, we had news that there were a bunch of lawsuits against Coinbase because people were saying, you're keeping my money. How dare you keep my money? You have these coins. A day later, Coinbase released an announcement that said, hey, we're going to support Bitcoin Cash for everyone out there. You're going to get free money. And everyone was like, yeah, let's drop our lawsuits. And then we had the same situation for Bitcoin Gold and then Bitcoin Diamond, which they haven't added support for. But as more forks continue to happen, cryptocurrency exchanges have a problem where they may face lawsuits because everybody wants their extra coins. So now what we're having with the Bitcoin Cash original chain and the Bitcoin Cash Satoshi's Vision, no one really wants to support it. I think 1 or 2 exchanges have announced that they're going to be supporting Satoshi's Vision chain, but everyone else is pretty much like, no, we're just going to keep Bitcoin Cash as Bitcoin Cash, still give it the BCH. And when they release something like this, I can only imagine how reluctant Coinbase actually is to give support to another chain that they have onto their platform. It makes crypto kind of look bad when we have all these forks. I can only imagine what it does to the face of Coinbase. Like, whatever. I'm not going to get into the entire discussion once again. But the point is, remember about a day or two ago, it had to be a day and a half ago or something like that. And I said in a video, the entire market was like in red and Bitcoin Cash was up around like 12, 13%. And nobody could really figure out why. I guess it was because of the news that Coinbase said that they were going to not only give it the same ticker symbol, but that they were going to resume trading of it eventually. I'll assume it'll last them a while before they officially add Satoshi's Vision, simply because a lot of people have been coming out the last like 2 or 3 days, and they've been saying that there's a problem with the Satoshi Vision chain, that it's not stable. There's a possibility of a 51% attack, a double spend attack. A lot of exchanges are saying that we're going to credit people with these coins, but you will not be able to trade, sell, buy, withdraw the coins at any point in the future. I sometimes think if I had an exchange, I would like hope that the problem would simply disappear into the background and we would never have to hear about it again. But I assume that's not how things work in the cryptocurrency space. A lot of people are going to want their forked coin, especially if it ends up being worth even like 1/10 of what Bitcoin Cash is actually worth. People are going to want that free money. And this is not me saying this. This is what other analysts have been saying. A lot of people are expecting that when Satoshi's Vision coin is finally available, i.e., worldwide, and everyone has a chance to be able to trade it and sell it back and forth, that everyone's going to simply dump it for Bitcoin, which is usually how most forks end up working. But yeah, let's move on. It's a very Bitcoiny episode, if you will. US-based Bitcoin mining firm known as Gigawatt has declared bankruptcy with millions still owed to its creditors. The firm filed for Chapter 11 bankruptcy at a court in Eastern District of Washington on Monday, revealing that it still owes its biggest 20 unsecured creditors nearly $7 million in court documents seen by CoinDesk. Creditors include that's not important. Gigawatt has estimated assets worth less than $50,000, whereas estimated liabilities are in the range of $10 to $50 million, according to the court documents. They said the corporation is insolvent, and unable to pay its debts when due. Read the minutes of a special meeting of the shareholders of Gigawatts, which was held on the 18th of November. The corporation and its creditors would best be served by reorganizing of the corporation under Chapter 11 of the Bankruptcy Code. So this, if for those who are wondering why I'm talking about a company called Gigawatt, it ties in directly into this. The drop in Bitcoin hash rate has sparked rumors that China has turned off huge numbers of mining rigs as the process is no longer profitable. Video and photo content, which allegedly came from F2 pool owner Bitfish, hit Western social media on the 20th of November, being uploaded by local news feed CN Ledger and primitive partner Dovey Van. They said many miners are mining at a loss in the current price point. Now it's more economic to turn it off and take it off the rack to reduce cost of electricity and OPEX, end quote. Here's a video that looks devastating. Bitcoin price continued to suffer after a week of losses. According to Wan, the turn-off price for mining in China with a Bitmain Antminer S9 rig is approximately $3,800, will adjust down as difficulty and competition also drop. Factors such as China's dry season forcing up hydroelectric costs exacerbated the problem. She said, adding that some top mining pool owners have admitted operating at a loss for several months. F2 Pool subsequently released its own list of mining price cutoffs, urging miners to check in to ensure they were running in profit. The biggest thing that we have feared for quite some time, or maybe people who are mining maybe more so have feared, has completely come true. We had a couple months ago, there was the news that in order for people to be able to break even, first of all, Bitcoin's hash rate has been dropping for quite some time. Not like super dramatically, but it has been going down. Months ago, I think it was Tom Lee, if I'm not mistaken, he said that the break-even point for Bitcoin mining, I think it was like 6,800 or something like that, maybe like 7,000. And I think he said that we were relatively close to hitting the point where the break-even point was going to be, I think, 8,200, somewhere around that number, floating. I can't give an exact number. And he said he believed that this is why the price of Bitcoin was going to hit $25,000 by the end of the year, simply because logically to him, the price had to go up because people wanted to be able to, Bitcoin had to be profitable for order for people to be able to mine it. Well, what's been happening now is that as Bitcoin's price continuously slides down, it's no longer hyper profitable like it has been before. And we get situations like this where people created mining companies. I have no idea exactly when Gigawatt, I don't even know these people, launched. But we have a lot of people at the beginning of this year who ended up launching cryptocurrency firms and projects and corporations and stuff like that, where millions of dollars were thrown at them in order to be able to mine Bitcoin and Ethereum, as these were the main two coins that people wanted to mine at the beginning of this year. As prices have gone down, I think Ethereum may have also crossed its what's it called, like profitability line, if you kind of want to call it that. A lot of people have been talking about that they've been switching over from Ethereum to other coins in general. I know that there was like a big move as well for a while back to Bitcoin Cash from, I think, Bitcoin, because I think the hash rate of Bitcoin Cash, what's it called? I think the mining difficulty switched a lot easier. I can't remember all the specifics. Bitcoin at the moment is scratching the surface of not being profitable at all, especially if we're getting rumors floating around that Bitcoin's price could potentially drop. I don't know if these numbers will ever come true. There are people quoting around $1,500 per Bitcoin. There are other people quoting around $2,500 per Bitcoin. I think the lowest I've seen was 15 to 25, and we're getting people talking about that 3,800 could be the next level of support, somewhere around there, and therefore Bitcoin is going to test these numbers. And yeah, we'll kind of go on from there to see exactly what happens. No one knows exactly what the price of cryptocurrencies, or Bitcoin in particular, is going to be over the next, I can't even say months anymore, like next couple of days, because the price is continuously sliding down. But a lot of people have been turning off their computers. A lot of other companies have reported that they are not declaring bankruptcy, but they're turning off their computers because, for those who don't know, the way that mega mining works is pretty much you get a bunch of rich people. You say, I have an idea. They throw millions of dollars at you. You rent out or buy a gigantic plot of land and a whole bunch of like metal containers, and you mine cryptocurrencies inside of them. But then when you don't have the money to give these people back their returns and stuff like that, you have to completely shut down, and there's a whole bunch of problems because everybody thought that the price of cryptocurrencies were going to continue to rise. And usually, and it's like a triple-edged sword. Is really weird because you have to mine the cryptocurrencies, you have to make a profit, you have to be able to sell portions of the Bitcoin in order to be able to pay for your electricity costs, and then you also have to, typically when people are investing in stuff like this, they don't want fiat currency back. Sometimes they usually don't want fiat currency back, and they want the cryptocurrency that you're mining as their payment for their investment in your company. So it's kind of just the way things are. To be fair, this isn't the first time that this has happened. This has happened many other years ago as well. Even when the hash rate and stuff like that and the mining difficulty was tremendously lower than it is right now, especially because at the end of 2017, we had a huge uptick. Not to spend too much time on this. It's just a lot of people keep gambling in cryptocurrencies, and not even like buying and holding. I mean, like they're making all these, there have been so much other news that I just haven't had in these videos where people are making these like huge companies and huge hedge funds and huge this and huge that, throwing tons of money at it. And everyone expected that by this point, because we were told that this was the promised time of November, that prices would start to go back up, and the prices haven't gone back up, and therefore a lot of people are losing their money. And this is just kind of where the cryptocurrency space is right now. Let's hope that we eventually end up moving back. I mean, at some point we will, but the fact that people all around, I don't know if, specifically in China, I'm not in China. I can't go to every single mining factory, so I can't tell you, but I'm sure this is definitely happening in mass around the world. Let's move on. Next up, following the cryptocurrencies market foray down to fresh yearly lows, investors are becoming increasingly alert to news regarding upcoming institutional aimed products, including that being offered by Bakkt. On the heels of Bakkt's recent decision to delay their platform's launch until late January 2019, the company released an update on their Twitter account, informing the public about why Bitcoin will initially be their primary focus. It noted that its liquidity and classification as a commodity by the U.S. Commodities and Futures Trading Commission, or the CFTC, are the primary driving factors behind the decision. In a two-part Twitter thread that explained this, they said, "We've been asked why we're starting with Bitcoin. Here's why. Bitcoin today accounts for over half of total crypto market cap and has been deemed to be a commodity, and its derivatives are regulated by the U.S. by the CFTC as the world's most liquid and widely distributed cryptocurrency, and where we've seen the most customer demand. Bitcoin's profile creates a liquid product on which to build a futures contract. If I'm not mistaken, I believe that Bitcoin is probably the only cryptocurrency that we have right now that has been properly deemed anything by some institution in the United States. Like, I think it's just Bitcoin, like not even Litecoin, not even Ethereum, not even, like, I think it's just Bitcoin at this point. And other people have been walking on thin ice, trying to find characteristics between other coins and stuff like that that are very similar to Bitcoin in some type of fashion to be able to list onto their platform. And this is where I think that we're kind of going. And as far as like I've gone over why Bitcoin is the most liquid. And I don't, especially at this point, think that it's just because of the name. I think it's because a lot of cryptocurrency exchanges have it as their main or top thing that people can swap back and forth into. And I've said before many times that I think that it would lose a large amount of its market share, or even like just percentage-wise, if the top like 20 coins were given like a swap between all other things. But that's kind of neither here nor there. The importance of platforms like Bakkt has ballooned since the cryptocurrency markets crashed over the past couple of weeks, as many investors now feel that institutional investors will be able to resurrect the markets and lift them back to their all-time highs and beyond. Despite this, Bakkt's launch has now been delayed by several months, meaning that investors will have to wait longer to see how the markets unfold naturally without the potential influence of Wall Street funding. In a November 20th Medium post from Kelly Loeffler, Bakkt CEO, she explained that the exchange will be delaying their launch until the 24th of January of 2019, citing their commitment to releasing a stellar platform that is fully functional on day one. As the reasoning behind, you can tell it, I just woke up, behind this decision. She said, given the volume of interest in Bakkt and work required to get all the pieces in place, we will now be targeting 24th January 2019 for our launch to ensure that our participants are ready to trade on day one, she said. I mean, I know why they're targeting Bitcoin or why Bitcoin is like the main focus of everything. Like, I totally get it. I'll put it this way. I think they would be foolish to only have Bitcoin as their main thing in like a year and a half from now. If Bitcoin is the name that we need in order to get the entire cryptocurrency market moving, why the heck not? Yeah, there's not an enormous amount of news today, or rather like everything is kind of Bitcoin focused. A lot of the news has, if you watch like CNBC and stuff like that, when people are talking about the current situation, a lot of it comes down to what Bitcoin Cash did. A lot of people are saying that the cryptocurrency prices may have moved down because of something that the SEC said, or it could really be anything at this point. I think there's never a full-on answer in the cryptocurrency space, because whenever we do have news that something has happened in the cryptocurrency space, or that something is the reason for the prices moving down, a day or two later we have something else contradicting it. Yeah, no major why did this happen news. A lot of people are still expecting the prices of some of the coins to continue to move down. Let's see if this ends up happening. I think that is definitely going to do it for this video. Hope you all enjoyed. Hope you all are having a great day, morning, afternoon, and or evening, wherever you are, wherever in the world you might be. I hope it's absolutely wonderful. Thank you once again for watching and or listening. And yeah, I'll talk to you all soon. See you.